The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. This is Veterans Day, and we are going to start the show with a moment of silence for our veterans. And I'd ask each of you today if you could have a chance to help a veteran, if he's standing on a corner and he looks like he's really a veteran, give him something, no matter what it is. God would appreciate it, and I'm sure he would. So we're going to take a 1-minute break here. Everybody will probably like this. So it's one moment of silence for the veterans who've gone in the way of God's way. Okay, folks, let's start out with this picture that I posted in here from 1945 of Winston Churchill, Franklin Delano Roosevelt, and Joseph Stalin. Folks, if they can make things come together after that big war, we still got a chance. I certainly don't like to see what's going on in some of the cities around the country, and that is somebody's behind that. That is orchestrated, because you just can't get people to come together like that. I know social media is pretty good, but there's something not right there. This is not good. If we live in a democracy of this republic, so let's see if we can get this taken care of. This is not good. That's the way it is. Yep, you're right, Duffy. Just like 1966, it's the same thing. Also interesting is today we have a super full moon, and we haven't had a super full moon like this since 1948. And guess what happened in 1948? Harry Truman beat Dewey. If you remember, the New York Times had a big newspaper. It said Dewey wins. Those newspapers are worth about $100, I believe, now on eBay. And yep, when you woke up in the morning and the final votes were counted, Harry did win the election. Harry Truman from Missouri was a really unusual guy. He always said, if you can't stand the heat, stay out of the kitchen. When he left the White House, he and his wife left in their car and drove back to Missouri. He would not allow any Secret Service. He never had a Secret Service detail. And he could still be seen on his front porch every day reading his paper there in Missouri where he lived. So he was an unusual dude, too. So we'll see what happens. Okay, just back on a little bit here. Let's talk about the markets here a little bit. Folks, there's a slight chance, and I really mean this, a slight chance. It's something really very, very unusual has happened, because we had this tremendous move in the Dow Jones and in also the Dow Jones Index. And what's interesting about this from a technical standpoint, and that is this. You'll notice here that you see when the market was down 800 and some points on the November the 8th, the Dow Jones Index itself doesn't open until 9:30 because it's not traded as a future. That's the index. And yet it still went to a 1.27 move off that last move. Now you'll notice on the Dow Jones E-mini daily, it made new highs at that 1.12 level. That happens to be Bryce Gilmore's favorite ratio. Of all the ratios that I like, and I don't use this one very often, that was his favorite ratio because that's how Pythagoras squared the circle. In other words, how you take a circle to a square to a circle and to an ellipse is through that ratio of 1.128. That's way over my pay grade, boys and girls. So that's all I know about it. So I hope you don't ask me any questions about it. But he tried to explain it to me, but it was a little beyond what I was capable of figuring out when we first started doing this here. Now, the next one we want to take a look at here, just give me a second, and we will put up. This is the E-mini S&P, and this was yesterday. We'll put this up. You'll notice this has all the action in, and you'll notice that when we got down to that 2029 level, which was limit down, that was the 78% level off of the low from Brexit on the 27th. And then we rallied up, and what we did is we made a 1.27 of that move. Now, what the Dow did, the Dow made a 1.27 expansion. It went above the old highs. The S&P did not. Now, we did not go above the old highs in the NASDAQ. We did not go above the old highs in the IWM. All these other things, it's really very, very interesting. So here's what we want to take a look at next. So let's just look here at the NASDAQ just for a second here. And this is what it's been doing over the last day or so. And it's had some tremendous swings, as we've heard here, in all the different news places that we listen to. But you'll notice we went down to a perfect 61% retracement yesterday. When the NASDAQ was down about 70 points, it was making actually it was down more than that. Wow, yeah, that shows it was down over 200? No, yeah, that's what it says it did. Wow, hard to believe. Oh, part of that's overnight. But anyway, you'll see that it stopped exactly to the tick at the 0.618 and then rallied to the 50% level. Folks, the key number to watch here is 4680 because that's the spot where if you get below that, then you've got this thing could have some problems. We're quite a bit above that right now, but that's what we're seeing as far as some of these numbers. So the market's trading really nicely as far as hitting patterns and ratios and stuff like that. So we need to, focus on that. That's a thing that gets you to the promised land. And believe me, this stuff happens so fast that sometimes you just literally cannot react, with this. Now, I've had several questions, of course, many of them about the gold market. Folks, to me, I'm just going to put this up here and show you what we were looking at here yesterday. And I haven't updated it this morning, but I know where the price is. We got down to 1251 last night. We're trading around 1260 right now. This ABCD structure on this, takes you down quite a bit lower. Now, what's interesting, and I will repeat this, and this is really surprising to me, and that is the action in the silver market. And I wanted to show you this. If you'll give me 1 second, and here it is. The second is up. And here it comes. You're going to see a big, big divergence here between silver and gold. Now, gold is making new lows from yesterday by quite a bit. It's down another $7 or $8 at least. Yet silver is still trading above the price that you see on this chart right here. So this tells you that silver is acting incredibly bullish given the fact where we are with the gold. Now, will it pay catch up later? It's just being delayed. That I don't know. All I know is that this chart on the gold appears that it wants to go a little bit lower. Now, if we get above, we'll take a break, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to be talking a little bit about the copper market right now. As you can see, we've had a 40-cent run in copper in the last 5 trading days. Today, we hit a 78% retracement of last year's high, and we've been up 15 days in a row, I believe, in copper, which they haven't seen that since Hector was a pup, and that dog's 37 years old now. So it's been one heck of a run in the copper. If gold would have done that, we'd be trading at 1450. Someone's asked a question, do I think that gold could have bottomed here? Yes, it's possible. The problem is it's still way below the 78% level that came in at the 1262 level. I really thought that had a chance to hold there, but once it broke, it went down to 1251. What I would do, if you're looking to be long the gold, I would wait for you to see some type of a holding pattern in here, because with that big spike that we had after the election, that really had a chance to gold. The bulls that were in control as it was running up. The problem was it was in the middle of the night. It's rather thin compared to regular trading, and so it doesn't take much, to move these markets. And that's the main thing. Just like in the stock market, folks, it does not take a whole lot to move the markets when it's limit down in those things and buying starts to come in. I'm watching this stuff all night, and you can see what might take thousands of contracts, during the day, you can only do it with hundreds of contracts. Now, the market that no one can control for very long is the foreign exchange market. So you don't see that same type of aberration in the foreign exchange market like you see. You still see some wild swings, but not like what we saw in the Dow. The Dow, dropped, it went up 1,200 points in 3 trading days. Now, that doesn't mean it's going to stay up here. It doesn't mean that it's going to break out to the upside, which everybody is talking about, the breakout to the upside. But if we look at the New York Stock Exchange Index, which we posted here in the room, we just barely made a 61% retracement. And since we have this big lunar effect coming in today, which is, we have perigee, the moon closest to the Earth, and is closest since 1948, this might be something really, really big happening. We'll have to wait and see. I do know one thing. If we go below that low we made last week on November the 4th, we're going down big time, because that would be the biggest bull trap you've ever seen. So we'll see whether that's going to be the case or not. We'll have to just let history tell us if that's what's going to happen. Now, with this lunar effect that we have going on here, I wanted to bring to your attention, I want to switch over to the corn market here, because this has been beat up quite a bit, and it's had some bad news recently, and it's held up relatively well. But if we take a look at the corn market, and this is something you might want to look at, because these lunar things on corn and wheat and beans are, very, 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 very interesting. And so corn should have some really good support down at that 332 level. And if you wanted to be a farmer at that time, you don't have to risk more than about 10 cents, which you have your 190 acres of corn for only $500, and you don't have to stay up night worrying about the weather or who you're going to sell it to or anything like that, which is one of the real beauties of the futures market. Now, the next one that we need to cover, and we'll probably spend a little extra time on this one, is the Treasury notes, because this is the one that is going to be talked about in the future, because they're saying that Chinese are dumping Treasury bonds. Folks, when the Chinese dump Treasury bonds, you are not going to know it. Those folks are very, very smart traders. They know how to mask their operations. So, the way they do that is they send the selling in from either Switzerland or Bangor, Maine, or wherever they want to do it, and you don't know who the other side of the trade is. And they own 1/3 of our debt, so we'll see. But as you'll notice here, we've been watching this number coming in, which is the 61% retracement. We were looking at this yesterday. We continue to go down today, and today we have come down and we have hit that number spot on. So this is where you want to take your last stand at the Treasury bonds and Treasury notes if you think there's going to be a rally. And that's all it's going to be, folks. We're in a bear market. We made that butterfly pattern, those big ABCD patterns way up there back in June. We were, reminding people of that pattern as we were watching it. But now this is the first major correction. It's actually just a little more of the correction that we had in 2015 between January and June. So this correction should tell us that we should get a little rally in here, and that's what it'll be. My guess is it could rally several handles up into that old low area at the 129 level. That would be like a 4 or 5 point rally in the Treasury bonds, and the bonds got down to 154 and change today, so them getting back to 159 would be something really big. Yes, this is one of Norm Winsky's big days that he's picked out. He talked about this before. Also, there is a November the 14th, which I believe is Monday. Let's just double check this. Yep, Monday the 14th is a really big day, and that's one of Kevin Murphy's day, and he's the gentleman who has taken over the work of Bill Ehrman from Ehrmanometry. And so we'll watch that. So we're within 1 day. You got the 11th to the 14th. When you look at this, there could be a 1 day orb on either side. So we'll be able to see what's going to happen, and we'll see what's going to happen with this. But we should have some good. We're seeing great volatility. There's no question about that. This is much different than seeing the S&P trade in a 10, 12 point range for 2 or 3 weeks. Now we're seeing swings that are giving, huge amounts of opportunity. And they're hitting the numbers really well. If you don't believe in Fibonacci numbers after this, folks, hang up the jockstrap, because it's pretty much a done deal. One of the dinners asked me if I was a veteran. No, I was not. I was drafted in 1959. And I was 4F. I didn't realize how bad a shape it was. I knew I was deaf, but I was totally deaf in my left ear. Plus, I had a couple other things that they were concerned about. And so I was not allowed. I was classified as 4F. and they said the only time they would call me would be to fill bags in case the Japanese or the Vietnamese were attacking our shores. That's about what they told me. So my father had 4 brothers. All 5 of the boys from the family were in the service. They made it through okay. We had 4 cousins that went in during Vietnam. 3 of the 4 were killed. We had in the total in the family, I think we have 2 silver stars, a bronze star, and 5 purple hearts in our family. So that's it. What's interesting is my Uncle John, who was in Annapolis, he was a second lieutenant, and he was in the Navy during World War II, and his roommate was the man who holds the order of owning 2 Navy crosses. A Navy Cross is the equivalent of the Congressional Medal of Honor for the Navy, and that gentleman had 2 of them. Unfortunately, after getting out of the service, he could no longer stand the pressure and took his own life. But anyway, he was a real hero. Okay, let's get back to the markets. I enjoy Veterans Day because I really respect what they do for us. When I see these people out here, these young kids, just makes me sick.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, that's about it. I think before anybody should be allowed to make any type of protest, whether it is, they should go to Normandy. They should go to Burma, where we had the bridge on the River Kwai, and go to Mount Suribachi in the Philippines and see the memorials there. If you ever get a chance to go to Myanmar, which is the old Burma, that's where the bridge on the River Kwai was. You're going to see a cemetery that you won't believe. There are these little Asian ladies out with scissors on their hands and knees, and that's how they cut the grass around each of the memorials there. It's really something to see. If you can't get goosebumps over that, you're in a wrong country, brother. Okay, let's look at this, folks. This is a really important chart. It's from our good friend Jim Bartolioni, whose father was a hero in World War II, and Jim is an F-18 Hornet fighter pilot for the U.S. Marines, and he's now retired, of course, because he's a commodity trader. But anyway, take a look at this chart. This is really interesting. This shows the bull market in bonds starting back in 1981. Now, that's when the bottom was, September 1981. And you'll notice that secondary bottom there, that was the bottom in the stock market in 1982. So that's the real key bottom right there. And then we started up, and every single one. Whoa, they don't see the chart. I hope that's it. I just posted it. Uh-oh, the computer gods are fighting against me now. Did the chart come up, folks? Uh-oh, good. Okay, great. But look at these corrections, folks. This is truly amazing. You're talking about a 35-year market, bull market. We've had 1, 2, 3, 4, 5, 6 equal moves in this thing to the downside, and still can continue to go higher. Now, this last one, of course, we had the big 3 drive to a top pattern and all those butterflies that we posted before. So this is telling you. And the other thing is you can see the strength of how this has come down here very, very quickly. And this is at the same time where the Federal Reserve is trying to decide whether they want to raise interest rates or not. Folks, the market is already telling the Fed, we've already raised interest rates for you, so whatever you do, we don't really care. So that's neither here nor there. Now, there'll be a lot of, they'll be jumping around. I was going to say gerrymandering, but it has to do with politics. Anyway, there'll be some movement in the markets, of course, up and down, if the Fed comes in and when they do, which will probably be sooner than later. But the market is still trending down. That is a major top, in my opinion, and it could be a spot where it could go up for a great deal of time. Now, there's one sector that we really need to discuss here, and that is this one caught everybody by surprise with the exception of Jamie Dimon. Let's just move this over here a second here, and this is the banking index. You'll see that we've had a pretty big move here. Pretty big move. Boy, if that's not the understatement of the year. We had a 10% move in this index. During the election thing, the Dodd-Frank bill will probably be repealed. It's certainly going to be changed a great deal. And they're also thinking of bringing back the Glass-Steagall Act that was brought out in 1936. And right before President Clinton left office, he repealed the Glass-Steagall Act, and that allowed commercial banks to go into investment banking. What they want to do now, the Dodd-Frank bill evidently puts handcuffs on small banks, so big banks can grow and they're protected. They're under that SIFC. I don't know what it means. It basically the bill means that big banks cannot go under no matter what. Well, I wish I should have that kind of a deal myself. Anyway, this is where we're looking at now. If we take a look at the banking index on the the long-term daily chart of this banking index, let's just get this up here so we can take a look at it. You'll see that we're still at a 61% retracement from where we were. Yes, Rubin was from Goldman Sachs, as was Henry Kaufman, and we'll probably have Mr. I can't remember the dude's name that runs Goldman Sachs now. I can see his picture, but anyway, he might be our next secretary, but they're talking about Mr. Diamond right now. Let me do something here, folks. Oh, good. We're here. We're coming down here in corn. I'm a short little corn here. Give me a second here. I've got to turn this limit minder off. Otherwise, we are going to be listening to something a little bit more. There we go. That's what I wanted to see. Okay. Move on to the next one. Okay, well, let's get back to this banking index. We did have this a very, very emotional move, and we'll see what happens with that, and we'll do one thing for the other. One of the things I have to do here over the weekend is to reassess what all these markets really did for those 2 days that we had this emotional move from when President-elect Trump was decided the decided winner. What will the markets actually do? Now, folks, it's much easier for someone, if they wanted to, like the Federal Reserve, to control a stock market that's based on indices that have weights, like with the Nasdaq or with the Dow Jones. That's specific because the Dow Jones is a price-weighted index. So prices of stocks like Goldman Sachs and Travelers and all these, heavily banking stocks, that's what makes the Dow Jones go up so much. So that's skewed. So if you look at the New York Stock Exchange Index, we had a heck of a rally, but all we did is we just rallied to a 61% retracement of the previous move, So that's it. Yep, that's correct, Mr. P. We've moved 1,400 points in the Dow from the middle of the night. That was around, it really started around 10:30 at night. Eastern time is when we bottomed, when the market went limit down in the markets, and then from there we went up. It was, we'll see what's going on. Anyway, we'll see what's going to go on here. All right, let's move on to the next thing we want to talk about, and that is hold on a second, I got to pull it up so we can take a look at it. Let's put this corn chart up here because we've had a request to take a look at it again. And I don't want to get people to be confused because we're still quite a long ways from the target that we're looking at here in the corn, and that's down here at the 333 level, 332 level. And remember, we have this lunar aspect, which is a big one. We have the full moon, and we have perigee, which is what they refer to as a super full moon. So we want to watch that one very, very closely also. So that's another key one, to take a look at. The second one I wanted to watch here is the IWM. This is the small cap. This one's really easy because, this is not that big. Someone asked a question about the wheat. The wheat looks okay, but the actual pattern in the corn looks, corn is, it's like melted butter, but it's a great trading vehicle. You don't get too many surprises, and when you do come, they're usually not that bad as opposed to some of these other things that you get during these money supply reports and stuff like that. But if you're looking at the IWM here, you'll see that all we did is we rallied up to the previous high that we made in August. And remember, we did all this in just a couple of days. And that's just basically panic-type buying. Whether we continue up from here or not, we'll have to wait and see. But we did hit a couple of key figures that we talked about when we started the show. We made that 1.27 in the Dow Jones. That's a real interesting one. I want to post that right after this show, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and I posted a chart of the Dow Jones Industrial Average along with the Bradley model. This is the regular Bradley model. The reason why I put this in is because I was expecting a high to come in at this time, but it was probably low. I don't know. But what's interesting is that we did hit the exact 1.27 of that move that we had from the night before the election. Now, remember that the futures went all the way down to the 78% level. They dropped another 800 points from that level, and they still went up, and they made a new high on the ground, but they only made it 1.12, whereas the Dow Jones Industrial Index itself made the exact 1.27 at 18,885. That was the exact number. So keep that in mind as you're looking at these charts. So it's going to be quite interesting to see what's going to happen. Just for purposes that we were talking about on the show this morning when we were looking at the price of copper earlier, we've now dropped almost 25 cents down from the high. We're trading at around 250 a pound now in copper. So I would think that 78% retracement that we saw up here at the 273.5 level is probably a valid 78.6. That's what I would be thinking if I were looking at these charts in a Fibonacci type way, which I do like to do. So we'll keep an eye on that. The corn market, and I would say that if you would get the price of corn down to 332 today, it's probably going to be a low risk buy. But if you wanted to be super safe, you could wait till Monday to see if it's going to hold that level or not. But remember, corn is it's the largest crop we have in the United States. It's one of the better traded of the futures markets. So you certainly you'll have a spot to do it if you wanted to be able to do that without any trouble at all. Okay, we'll see what we have here. Well, no, that was just a spot that I was showing you in the copper, my friends. That's that's really what I just looking at patterns. That's all I'm really doing. I'm not looking at anything, really fantastic or anything. Here's another one that's interesting, folks. If you're looking at numbers and you like Fibonacci, I'm trying to do these to see, why this market did what it did, and we'll see here what we have. You'll notice in the Dow Jones Transportations yesterday, we went right up to an exact 786. Much like we did with the copper. Now, that completes another Gartley that we had going back from January. So this is going to be interesting these next few days here in the market, because if the market starts down, you know who they're going to blame it on, right? Hello, hello. That's going to be a real interesting one, because we will see how things figure out. Now, I wanted to spend one more minute here on this particular chart, which is the New York Stock Exchange Index, to show you that we did get a slightly above the 61% retracement. Remember now that the Dow went up and made a 1.27 expansion. Now you can see that's because the Dow is heavily weighted by price-weighted stocks. When you have stocks like Transamerica, Goldman Sachs, these really big Dow stocks, those are the ones that push the darn thing up. So, and that works when it's going up. It also works when it goes down. Look what Google in the Nasdaq. Look what Google and Amazon. Look what they've done to these stocks. They've absolutely tore them apart, and that's the main thing that you have when you're watching these things as you see them unfold. It's a very interesting to see what's going on. But we are having some pretty good volatility. Silver is now starting to take a look at the. Excuse me one second. Silver's now starting to back off a little bit, which we said that wouldn't be a surprise if it did that, because it's been lagging gold by quite a bit. Oh, we've got a caller in here from Singapore, our good friend William. William, are you there?
Yes, I am. Thanks for picking up my call, Mr. Pesavento. Actually, I think of asking you a question on the crude oil, CL,
Yes.
as well as cost, COST.
Okay.
I think crude oil has been trying to test the same low reached, the last few days. So I'm thinking that whether is it a good opportunity after it hit
William,
a high of 45 plus. Yes.
Yes, we're trading at around near the 43 level again, which is where we were, way back in September. It's due to bottom, but it hasn't bottomed it yet. I believe it's down 15 days where it's made lower lows or lower highs for 15 days.
Yes.
That itself makes it an outlier event, but right now I can't be a buyer in the crude at this time. It's just I tried it once and it didn't work, so that's enough for me, and I didn't want to mess with it. And if you see what's happening to the gold market, these people that are asset based, where they think that oil is black gold, they're getting hit too. So that brings margin call selling in. So you don't want to do anything today. Wait for a day or two to see if it settles out a little bit. That's the main thing that you should do. That's the way I would approach it.
I see. If let's say it breaks, should we turn into a sellers on the crude?
Yes. I didn't hear the question. Say again, please.
What I meant is that if let's say it break that levels, so it will be heading lower, and should we just turn short on it?
Well, I can't sell it being, I don't sell breakouts very well. In fact, I'm probably the worst there is, but, the trend is certainly down, so I can't do anything with it here. I just want to wait and see what happens. I believe that, gold's heading lower. That's been telling us that for the last few days. In fact, we spoke on Skype the other day, so that one's working well, but the rest I don't know. Now, you had a question about Costco?
Costco, yes.
Okay, now I posted the chart in, and you see there's some pretty good support there at that 142 level. But again, if that 142 level breaks, you're going to be looking at another $15 to $20 lower in that, just to make the 61% retracement.
Okay, but that was really what you expected, earlier on, when Larry Williams was saying that he's quite bullish on gold. So it's on Costco, and you felt that it will hit lower. So you're quite spot on that Costco move.
Yeah, we want to be looking at that around $10 lower at around $136,
right.
or excuse me, 136. You'll notice that it made that beautiful double top up there, between December and August. Just absolutely perfect. It gave you, every reason in the world to get short up there. But right now we'll be looking for a buy in the Costco if we can get it down here about $10 lower.
Right. So you're all right on both the gold as well as the Costco.
I have to get 1 or 2 right every year, or I'm going to be in big trouble, William. William, how's your air quality now in Singapore?
In terms of air quality.
Yeah, is the air quality better now with fall coming in?
In fact, surprisingly, this year was not bad compared to last year. And last year, the haze, can last for a few months, but this year was pretty good. So far, we are all right. So you can come here for a holiday season if you like to.
Well, you wouldn't have to twist Sarah's arm. She loves to see you, and we love Singapore, the city of the lion. It's really a beautiful place.
I'll prepare the durians for her.
Thank you very much, William.
Thank you.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have a caller from Ohio. Tim, are you there?
Yes, sir. Yes, sir. I'm in SDS, pretty much right where it's at right now. I thought I'd give a call and see if you thought I had any positive future on this.
I think you do, and the reason why is that it did go down into new low ground. You know, from the previous low, it hasn't really collapsed from there. But that's a really hard one to trade because it doesn't have the ETF ability for overnight trading. Because if you would have been in this overnight, it had a 10% move. It went all the way up to 18 based on what the S&P was doing, but you didn't do it. But if you're hedging yourself, in other words, if you think the market's going to go down, that's a good way to look at it. Much like looking at the VIX index. The VIX index is at the same place, has a little bit better chart picture, Tim, but it's harder to trade for most people because if you don't do the ETF, which is rather difficult, you have to do the futures, which is a little scary for most people. So the SDS would be the way to play it, in my opinion.
So basically, it looks like we're seeing some consolidation right here, and then we may be heading down. It's kind of a quick.
The problem is, Tim, I have a touch of paranoia, and I don't believe things that people tell me. So when I see the market go up a new high in the Dow and it doesn't have the same thing happening with the New York Stock Exchange Index, the first thing I start to do is to question why. And if you look at the bank stocks, that's the whole thing. It was about a dozen stocks that made the Dow move 700 points. Okay. So that's not fair. So the SDS would be the way I would play it.
Okay, so what I'm kind of hearing is what you're talking about is pretty much what I saw too, and so this doesn't look like an unsafe place to be right at the moment, at least.
Hey, look, if they didn't kill you when they should have killed you, they're not going to kill you now. That's the way it looks like to me. You know what I mean?
Exactly, yeah.
Maybe we're both paranoid, Tim, but remember what Freud said, that paranoid man only has to be right once to prove himself correct. So that's the main thing. Listen, thanks for calling in, my friend. May God bless.
Thank you.
Be kind to a veteran today and tomorrow and all the rest of the days. Amen.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.